I'm the only one here right now. Gonna go make some coffee.
Good morning, YouTube. I hope the voice quality and everything is fine. I just jumped out of the shower, got ready, feeling fresh again for a live stream. I had a hectic morning, and yeah, I'd say we get started. So this is today. Thank God the indicator is doing the charting for me now. So I have a little bit less work. Right over here, but let me actually turn off some stuff that I do not want to see right now, and also modify the kill zones. London session is, yeah, thank God to daylight savings time, or winter time here in Germany now. I kind of missed that, and was a little bit confused because now, yeah, London, according to New York time, London open is a little bit later than it used to be. 2 a.m. is still fine. That's 3 a.m. now, 4 a.m., 5 a.m. until 6 a.m. That's the London session. I do not want to see the London SilverBullet. Not the New York SilverBullet. The New York open session, not as well. The power hour neither. PM session neither, just the AM session, which is starting from 8 till 12. Alright, perfect. Background's there. We cleared the short-term high. We have the power of 3 indicator. We opened up this week with a pretty decent new week opening gap. If we take a look at that, and if I zoom out, then you can see the other things the indicator does as well. So we have our previous day's high, previous day's low, and also previous week's low. I have both of these settings turned on. If I turn on the previous session high low, give it some time. If I'm streaming live on YouTube and on Discord, it takes a little bit longer for indicator to load up. It's also a very big one. I wrote over 2,000 lines of code, and yeah, finally it's time for me to showcase it with or show it to everyone. Thanks, Agent Smith. Yeah, I spent a lot of time working on it, and yeah, I really put lots of work into it because most of the indicators that you have on the chart, like, for example, if you don't have TradingView Premium, you for example couldn't use more than, with TradingView Premium you can use an unlimited amount, but not everyone has the luxury to purchase the premium subscription. And yeah, then I have a bunch of indicators here, and they're not properly done, and this one is, and it's also very easy to control. This was my main focus, because 10 is the limit for the next level down. We will see. New York open is in 2 minutes. You can customize the entire indicator inside the settings, but once you have it customized, like the way you want to have it, then all you need is the control panel up here. And then you can toggle specific things. So let's say, for example, you want to see the Sunday price action. You turn that on. Once again, it's a big indicator, and I'm working on slimming it down. But right now, even TradingView is a bit laggy. You can see it on my cursor. It displays the entire Sunday. You can see the weekdays. You can zoom out. Previous day's high, old new week opening gaps. It shows you the higher time frame power of 3 candles as well. You can modify that in the settings below here. You can choose up to 10 candles and select the time frame. That's how I like to have it. I'm gonna leave the settings like this. which shows the midnight, 8:30, and the daily opening. So we already have that on our chart. No need to draw all that in. We have the 8:30 opening over here. We have the midnight opening over here, and we have the daily opening level right here. We already checked the session liquidity, which is right up here. We retested the VWAP very nicely with a fake market structure shift to the downside. But right now we simply have to understand we are in an uptrend. And yeah, we also, if we take a look at market structure, that's so much easier for me now because, okay, New York opened already up, I guess so. If I turn on the zigzag and let it load here quickly, it does the market structure job for me, and I don't have to use the path tool all the time when I'm streaming here. Yes, we just cleared the short-term high up here, or the buy-side liquidity, previous buy-side, and right over here now with the path tool on our chart, we can really see how we, hang on, my stupid mic, better? Yeah, no, not really. Now anyway, how we accumulated or consolidated here during Asia on Sunday. We formed this double bottom, retest, and continued the trend to the upside. Consolidated after the New York, London kill zone ended. Took the buy side one more time, reversed back into our range. And yeah, right now we're above London session buy side, so let's label that. We are at the current high of the daily candle. Yeah, now it's better. Now it's working again. But we do not need to see that all the time, and that's why I like this control pen. I can simply enable and disable all these different things. Alright, we took buy side, we bounced off the VWAP. I'm not gonna drop down to a lower time frame than a 5-minute time frame. I think maybe you have seen my most recent video that I uploaded. Basically the most important lesson that I have learned trading ICT concepts is not to get lost on the lower time frames, really. It's the worst thing that you could possibly do, especially if you just have that, yeah, how do I say that perfectly? If you're tempted to enter a trade based on a gut feeling while you are there to execute your trading plan. What I mean by this is, on the 1-minute time frame, it's so super simple to get carried away. You see an opportunity and you like chasing that opportunity, and maybe you make profit and you got lucky, maybe not, and then you're like, man, I don't know. On Friday, Saturday, Sunday, I contemplated, okay, I'm gonna stick to my plan, and now it's Monday or Tuesday after the weekend, and I already ditch my entire trading plan. Like, what's the point? And it's much harder to get tempted into these setups on a 5 or 15-minute time frame. You do not get super many opportunities here on a 15. We can see that all this, what we saw here on the 5, this potential market structure shift, blah, 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 it would have been nice. All we did here was consolidate. Bodies respected the bullish fair value gap right here. We bounced off the VWAP. We're still in the uptrend. We didn't close below the 15-minute market structure shift level. We only rated some stops. Why? Because New York wanted to continue to the upside. And yeah, being glued to the 1-minute time frame really, in my opinion, never helped me really, unless you're super disciplined. Maybe if you're super disciplined and you do not struggle with over trading or revenge trading, then yeah, the 1-minute time frame is built for you. But if you do struggle with these things, yeah, the best thing to do is simply to avoid, let me skip these ads, simply to avoid the 1-minute time frame. You get the same amount of maybe not the same amount, but you get 2022 reversal setups, fair value gap continuation based on an optimum trade entry setups, even on the 15-minute time frame. And it's much slower. Once you master a higher time frame, of course, you can always move to a lower time frame and do the exact same thing, because maybe now you have taught yourself that discipline that you need to trade a 1-minute time frame. But yeah, I'd say for the beginner ICT trader, 15-minute max. Yeah, not even a 5-minute time frame. It's even simple to get fooled right here. On a 5-minute, we had a market structure shift confirmed. We closed below right here. We also saw that on our indicator. I'm still gonna do some manual lines here. Good morning. Then you have to do what's best for your development at your point in time, and that might even be something you don't like. If you would work at a normal company and your boss would tell you, Matt, trade the 15-minute time frame. If I see you trade below the 15-minute time frame, you're gonna get fired. What would you do? Okay, now my boss told me, blah, blah, blah. With trading, it's hard because we have the freedom to do everything we want. No one is telling us what to do. Go long, go short, go to the 10-second time frame, go to the monthly time frame, trade on the 5-minute, 1-minute, whatever. No one is telling us anything. We have all the freedom in the world, but yeah, freedom to do everything comes with an eternal vigilance. So yeah, we have to be very, very careful of that, and sometimes that means to do the things we do not want to do, to not go on YouTube and look for the latest 1-minute time frame ICT strategy and all those things. To be patient, do your 15-minute charts and follow your plan. Once you see that plan work, you can continue. But don't make the same mistakes over and over again. Okay, we open up after 9:30 with a bullish volume imbalance. That's not my motto, that's not what I'm looking for, but obviously we continue to rally. Let's use the multi-time frame volume imbalance indicator and go down to the settings. Down here, 5-minute time frame, display 10. Let it load here quickly. Then it's gonna show us the 10 most recent 5-minute volume imbalances. And I wanted to extend it all the way to the right. So we see, even though we consolidated here on a 5-minute time frame, we didn't get super many volume imbalances, really. This morning we bounced off volume imbalance right here and a one from Friday. Let's see where our buy side liquidity targets would be at. Yeah, you saw me getting lost on Friday as well, and I wonder, why am I doing it again? And it always comes down to that point of you have the freedom to do everything. No one is telling you what to do. And yeah, sometimes when no one is telling you what you should be doing, some people just can't deal with that. If you're self-employed and you do freelancing, blah, 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 and there's no boss telling you what to do, or you're a YouTuber and you have to come up with the things that you have to do for yourself, some people just wouldn't come up with the ideas. And the same way it is with trading. If you don't have anyone telling you what you should do, and you don't listen to yourself, so like, yeah, I'm gonna be a 15-minute time frame trader, I'm gonna make the transition. It's Monday, and you're already on a 1-minute time frame. It's super hard to get back into it. But that's why we need to be super disciplined. All right, looks like we're expanding towards our previous day's high. Right here, previous day's high, this orange line. We already took buy side liquidity. That next buy side liquidity would be up here. We could check for higher time frame fair value gaps. That's also included in the ICT all-in-one indicator. So now we have our volume imbalances. Let's plot our higher time frame or multi-time frame fair value gaps. I'm currently got the daily fair value gap selected. You can already see how much easier that indicator makes my life without having 10 indicators on my chart. And what do we see right here? Previous day's high lines up with a old daily bearish fair value gap. Not really old, but a daily bearish fair value gap. And that, I'd say, my friends, would be the drawn liquidity. If I see a reversal setup later on during the session up here, I will execute. Otherwise, yeah, we will get lost on the lower time frames again. And that's not what the trading account is for. And yes, that might be a bit boring, and some viewers might turn off because I'm not scalping the 1 minute time frame, playing roulette basically with my funded accounts. Been there, done that. If you come here to learn something, then you're at the right place. We could take a look. And you see how super simple it would be to try to get in long of this bullish fair value gap. Of course, it might play out, but you never know. And only if that's, I don't know, if that's your model and you look for a fair value gap right at the 930 open to continue with the momentum, and you've backtested that, and you feel confident in that model or in that specific setup, then yeah, do that. But it's not what I want to do, not what I have backtested. You can see it already plays. We test the volume imbalance right here, paired with the bullish fair value gap, and we started to form a new higher high. If you're just scalping based on your gut feeling, then yes, that's what you would do. We just took buy side liquidity. We have more buy side here and the previous day's high with a daily bearish fair value gap resting above. So what I would do is I would log out of my TraderWeight account and go to my paper trading account. And here you have the freedom to do whatever you want. You can chase, you can revenge trade, even though that's really not the goal of why I choose to trade on a paper trading account, because then you still allow these bad habits to, I don't know. It's like you say you stop smoking or quit drinking, and then you allow yourself to, I don't know, drink or smoke only on parties and blah blah blah. Now you're on your paper trading account, and now it doesn't hurt. Now you're allowed to do whatever you want. But the line between the paper trading account and your funded account is very, very thin. And sometimes in these scenarios where we have lost something and we want to make it back, our brain goes back to, I can make that back. I've done it on a paper trading account so many times. Come on, come on, come on. It's always the same thing for most traders. We're not that different. As we can see, we're in a pretty strong uptrend. 930 opened up. Bullish fair value gap, the first one. We bounced off it, delivered into a new high. But now we're starting to get some rejection. But nothing here on the 5, nothing on the 15. On the 15, we're still expanding to the upside. So if you want to short against that 15-minute candle, which is about to close, go for it. But if you do not want to do that, then I'd say let it be. You can still watch it on the 1 minute. Also keep in mind that we have my headphones. That we have NFP news this Friday. bullish volume imbalance right here on the 1 minute. And do you see the volume imbalance from the multi-time frame? 5-minute time frame, volume imbalance, and we get to see that even on the 1 minute time frame. This way we know that this gap to the upside is also a 5-minute gap to the upside without having to take a look at it. Continue further to the upside, take the next buy side, and then I would, yeah, maybe this rally will continue towards the previous day's high. Volume imbalance right here. And also a 15-minute volume imbalance. Very good sign for bullish order flow. There goes the next buy side target. I think we're just gonna quickly expand into buy side liquidity. If you guys have any questions, feel free to ask me on both Discord and YouTube. Good morning, Ragnar, or good afternoon, and good morning, afternoon, cool. I will add all the accumulation zone VIP members that used to be members with me on Patreon to the ICT all-in-one alpha version after the live stream, and then you can play with it yourself. Really, it's super customizable. Whatever you want to see, whatever your needs are for your specific strategy or for your charting that you used to do manually, you can modify it with this indicator. If you do not want the midnight open, you can still modify it and set it to a different time, or I don't know. You can customize everything here. You can even customize the macros, specific timings. If you use different timings based on your strategy, on your rules, you want to see that macro timing. And yeah, I will add the lifetime and VIP members after the stream. Then you can make it your own. And for all the not accumulation zone members, I stopped working with Patreon, and I'm not accepting new members with Patreon. I've created the new WAP page. The link for that is in the description box below. And here you can sign up for either only the all-in-one ICT indicator or one of our many membership options here. There's also a 15% discount only valid during the stream. So once the stream ends, I'm going to delete the 15% discount code. Right, we took that buy side, volume imbalance, good sign for continued bullish order flow. We close above buy side, open up with a new bullish volume imbalance. Let the indicator load up. Just a few points away from our previous day's high. We left that volume imbalance open. Yeah, and I think we should really expand into that daily bearish fair value gap, the ones that the indicator just drew up right here above this daily's high. Re-add it to the chart. Yeah, because we're now using the daily bearish fair value gaps, I would have to bring it back to, let's say, the 15. Then it loads up normally. Nice expansion here to the upside. From past experiences, usually during this summer winter time switch period where Europe, UK, Australia, they're all moving their time back 1 hour by 1 hour, and America is usually doing that 1 or 2 weeks after Europe and all the other countries. So yeah, there's a little difference for all the European traders now, where the London kill zone moved 1 hour closer to the New York kill zone. So the London kill zone right now ends at 6 a.m. New York local time, and it's starting at 3 a.m. The London Open therefore is at 4 a.m. All the rest is still the same, but it's 1 hour earlier. So messed up. I wanted to start streaming at 8 a.m. earlier, but because I'm so used to starting my stream at 2 p.m., which is 8 a.m. New York local time, yeah, well, I kind of forgot about that time change. That messed up my schedule this morning. But it is what it is. We have FOMC weeks on FOMC news on Wednesday and NFP news on Friday. Monday we already see an expansion to the upside. Let's see what my Bitcoins are doing. Are they going up as well? Yeah. Well, I mean, it's up a lot already. Comment in the chat if you hold some cryptocurrencies as well. The real subscribers of my channel, they know when and how I bought Bitcoin. It's an old video on my channel. I think it's almost 1 year ago while we were still dropping prior to the FTX collapse and all that stuff. Before I started to trade futures, I traded cryptocurrencies, but futures just move so much better. And yeah, I don't know, I like the session timings a lot. And yeah, New York Open, London Open, it's always the same throughout every day. Whereas with crypto, you get these long ass consolidations, which I do not really like. And it's just easier for me to hold. We looked at this right here from the dip in March 20 all the way up to our all-time high using our retracement levels. We could even use the ICT fib retracement level. And which area did we hit? Where did I say to accumulate? Optimum trade entry 70, 80%, 75% retracement, golden pocket. Roughly here's when I started to buy. 61.8, 65, 70, 75, 80%. And from my lowest entry, that's already up 120%. You can't complain about that. And to the all-time high, that's a smooth 3.5x. And that's only Bitcoin. I always, back in the days, that's how the name came up, accumulation zone. I wanted to do more crypto stuff, but because I'm not really doing it very actively anymore, I'm only doing it off screen, and I'm not sharing it on Discord either. I'm big on airdrops, farming airdrops, so if you'd like to see stuff like that on the channel, make sure to let me know in the live chat. There's some great opportunities in that crypto game. But you have to know how to manage your risk, like with every investment. All right, what's the time? It is 9:53. Let me hide the multi-time frame volume imbalances. I'm gonna leave the fair value gap on. Power of 3, kill some backgrounds. It's gonna do for now. New week opening gap. Yeah, that's enough for now. So we took the highest buy side liquidity that was available before we reached the previous day's high right here. And above here we have that daily bearish fair value gap. On a 1 minute time frame, we can see that we have put in place a retracement. So what we would want to see now is to reach this buy side liquidity. Basically, there are two ways how we're going to reach that. We're either going to push up, close above this bearish fair value gap, and continue or move to the upside, shaking out a few buyers on this move to the upside, getting scared that we might have seen the top. Now we get a bullish volume imbalance. We want to see the close above though, if we do not close above, what we'd see then likely is a run on short-term lows with a little break of structure. It's a scalping opportunity, but be aware that you're going against all the other time frames. And this, in my opinion, is not a high of the... It is a high of the day reversal setup, but I don't like the setups if we're just a few points away from our main liquidity objective. Daily bearish fair value gap, higher time frame point of interest. So better to wait here. Let's see if we close above, then we could try this inversion fair value gap on our paper trading account. Bullish volume imbalance once again. So let's see, maybe we get a entry opportunity on the inversion. Yep. Let's see how that plays out. We have a volume imbalance right here. And there we go. We just retested the entire inversion fair value gap. We're going to place our sell limit right here. We could even trail it. This is our main buy side liquidity objective. We could use, since the ICT all-in-one indicator showed us the daily bearish fair value gap, use that and split it up into percentages. 25%, 50%, 75%, and 100%, of course. Fade TV airdrops with crypto. You got to be early. You got to be really wants to come in and swap Ethereum against Bitcoin. They can basically, use the liquidity that I provided and do the swap based on our liquidity, and we get a small percentage of the fees, not a centralized entity or decentralized. And because I really like the platform, I used it a lot. And I don't know, I was early on it. And a few weeks later, I opened up my Uniswap and there was a little pop-up saying, claim your airdrop. And back in the day, there was no airdrops. Like, I looked it up, airdrop, what's an airdrop? I thought it was a scam. I clicked on yes, and out of nowhere, I had 400 Uniswap or something in my wallet. Back then, it was worth like $2,000, and I was sure this is a scam. So I immediately put them on my Binance account and sold half of it just to make sure that no one's stealing them again from me. But yeah, it's a way how they can reward early users of a specific protocol, like the Arbitrum airdrop, for example. If you've been using Arbitrum, the chain, depends on how much you used it. Yeah, based on how much you use it, you got a certain allocation of that airdrop. It's pretty cool. All you have to do is usually use the applications like Uniswap, like Arbitrum, the chain itself. And then you, because you've been an early user and you've used the chain, and then they decide they come out with a token, you get rewarded later. Alright, so we managed to close back below our inversion fair value gap. We made a higher high and we took out this low right here, but we didn't close below it yet. So this is not a valid structure shift for me. And we also fell short of that previous day's high, which is, I think, a little bit sketchy. We now have a bearish fair value gap lining up with that, but I will keep this trade running until we close below, because keep in mind, earlier we had the multi-time frame volume imbalances on our chart. I will put them on here again. And I'm also going to plot 5-minute fair value gaps. Oh, that's easy. Now I don't have to chart all these things. Super excited that it's finally ready. So we took out the slow, and right here, once the indicator is ready and loaded, we had a volume imbalance right here. Now we get our close below, 3, 2, 1. We close the position. Didn't play out. We fell short of the previous day high by a few points. Here on a higher time frame, we could really frame a retracement into the 5-minute bullish share value gap right here, this green area. We also have a 5-minute bullish share value gap over here, paired with a volume imbalance. We already used this bearish share value gap up here. And based on that, and based on this market structure shift, which is confirmed because we closed below it now, we could look for a short into more short-term lows. That's why I entered right here based on the breaker block. And yes, I'm gonna add breaker blocks eventually to the script. Keep in mind this is an alpha version, and we already have 22 different options in here. I want to find a good way how to display breaker blocks, and that will take some time, but eventually we're gonna get there. Bearish fair value gap here on the 1-minute time frame. We entered on the breaker block. Our target would be at least right here. But if we do not want to retrace into that higher time frame, 5-minute bearish fair value gap here being on the 1-minute time frame, we could also simply do, there we go, we're already filled. So now we have retraced into a 5-minute bullish and 5-minute bullish volume imbalance. Keep in mind this is also a 15-minute volume imbalance. Is it? No, it's not. But we can see it's also a big 15-minute fair value gap. Being on the 1, yep, volume imbalance, we've hit that. And now we're back to the 1-minute time frame. For the MMXM, since we are not in area of bigger time frame in Q, if we see this placement down, would you enter here? But considered low probability. Well, I mean, we're at the high of the day, and right here we just took a paper trade short here on the 1-minute time frame. I personally, to take a trade on my funded account today or this week, I would like to see something on the 15-minute time frame. It's not lower probability, it depends what your target is. So if you're on a 1-minute time frame and you see that market structure shift and your target is the low of the day, right over, or let's say the midnight level, then yes, low probability that that's gonna play out, because the higher time frame is just not ready yet. You have to understand that we have a higher time frame bullish share value gap right here, also on the 15-minute time frame. The probability that we're just gonna ignore that completely, it's not 0, but it's also not, yeah, the probability that we see when we have a nice and clear 15-minute setup like I have shown in my recent video. Let me pull it up. Go to the 15. Right here, order flow is still bullish. There's no reason to say why we have to go below the low other than we haven't cleared it today. The probability is still there. So if you take a short from up here, even though we haven't reached the daily bearish fair value gap like I did on the paper trading account, to get the retracement into our 5-minute bullish share value gap, my targets are also therefore respectively smaller. I'm not looking forward to catch the high of the day and hold it until the low of the day, because I know the higher time frame isn't there yet. If I see my setup on the higher time frame and I drop down to a 1-minute time frame to get a more refined entry opportunity, then of course, then it's possible, and then it's, in my opinion, a higher probability entry. But we will see. We got in right here. We kept holding it. Close below, market structure shift. We outlined all that. We could retrace to the VWAP. We could completely take out this liquidity without taking out the previous day's high. That's up to price. Maybe retrace and fill in the regular trading hours opening gap. But those are all maybes, while a retracement into a low-hanging fruit target, short-term low, 5-minute bullish share value gap, 15-minute bullish share value gap, has a much higher probability. So if you get in here, just make sure you scale out, take off 50% already down here, secure your 5 points, 6 points even, with a mini contract that's more than 250 bucks. And set your stop loss at break even if you're in with micros. And then you can still see if it's running and if it has that potential. But yeah, that's how I would answer that question. If we see this placement down, would an entry here be considered low probability? I think the low probability would be based on your target. The entry is always the same. The target is different. Sometimes we get the setup, but yeah. I don't know. I didn't like how we didn't take out this previous day's high. In my opinion, from my perspective, I would deem it lower probability to get a full reversal into the current low of the day, which would be down here at 4144 on ES. Because right now, all we did was reprice into a 5-minute bullish share value gap, volume imbalance, another 5-minute bullish share value gap, a big 15-minute bullish share value gap. On the 1 hour, we just had a strong expansion, so a little pullback is healthy, really. You could always say that if you only take 1-minute market structure shift entries, but 1-minute entries for me are scalping entries. You take them, you get in quickly, and I don't know, I at least, that worked for me, get out relatively quickly as well. Or make sure to set my stop to break even and take partials along the way. If I get in on a 15-minute market structure shift, let's look for an example. Turn off the indicator here quickly, because otherwise we're gonna have too many things on our chart. Last example. Right here. Yeah, on NQ that was much cleaner. So let me pull up NQ here. Oh, many drawings on that chart. No, that's not gonna work for me. I know which chart I have to open up. Where are all my drawings gone? Looks like they're gone. Here, and then the 5-minute time frame. Auto. In the 5-minute, we see the structure a little bit better. Right here, right after the New York Open, we pump up, same as we did today, but not that much. Then we form a higher low, higher high. We broke below this higher low. We close below it, we leave behind a bearish value gap, and we continue lower. And I think it actually delivered all the way into the Asian session low. This was last Monday. I remember that setup. But yeah, higher time frame entries rule for me. Of course, you could have also gotten a 1-minute time frame entry up here, but I don't know, it's much easier to hold if you enter on the higher time frame. Mentally, I have an easier time holding onto these trades. So on a 5-minute time frame now, we did, or no, we didn't. we left behind a little bearish value gap here on the 5-minute now. So let's look at it on the 1-minute time frame. And we seem to be making a new lower low. Now we have a tiny little bullish one here as well. Let's see. Yeah, but the point is that the 1-minute time frame for me is a scalping time frame, whereas a 5 to 15-minute time frame, really the 15, is a time frame where I would consider taking trades that I hold for more than, I don't know, 30 minutes. Where I get in, wait for my 2 to 1 to happen. Of course, there are many traders that do exactly the opposite with the 1-minute time frame, but it's super easy to get carried away on that time frame, especially for beginners. We pulled back, but we couldn't use a fair value gap or anything. We could have used this up closing candle maybe. We repriced into that and rejected. Okay, we immediately close lower. Let me check for the regular trading hours. We have a big regular trading hours opening gap. So this could add the confluence while it's short. Might be a higher probability than we think. Yet, I don't know, it wouldn't cross all the checklists on for my entry criteria, especially failing to reach my point of interest. And yeah, sometimes it's just missing your point of interest, like this daily bearish fair value gap paired with our previous day's high, previous day's low. Previous day's high, not previous day's low. Let it load here quickly. And that's okay. Then you simply didn't take an entry, because this could still end up being just a retracement to continue into that buy side liquidity. Yes, one electronic trading hours. So we're still inside that 5-minute bullish. Let's see what we do around the VWAP, because the last couple of times when we touched the VWAP or got close to it, we bounced right here at 8:45. We moved away from our baseline. We can see that strong increase in momentum once New York opened up, because that's when the volume starts to flow. Bearish fair value gap, we retested that and already made a lower low. But by just looking at the AM session range, started measuring from the low to the high, we're around to 50% of this last expansion to the upside, paired with the VWAP, paired with a 5-15-minute bullish fair value gap. So this would be my area that I need to see broken to frame shorts below all these lows. But right now we can see order flow is bearish here on the lower time frame. We make lower highs and lower lows. Now we're right around the VWAP. Let's see what price does here. We almost retraced the entire 930 opening range. And if we would have taken that high paired with the 5 and daily bearish value gaps above, I would be more confident in the short. Already took an anticipatory entry up here into sell side liquidity. That was hit very quickly. Yep, it might take some time to get up there, H&S Smith, 4200. we seem to be dropping here. Oh, that stupid microphone. Still, oh no, okay, now it's working. So I gotta do it like this. Alright, so now we close below the VWAP on the 1. Let's watch it on the 5-minute time frame. Starting to look like a New York Open pump and dump. We're at the low of the 5-minute bullish fair value gap, which would overlap. If we look here at the market structure, we could also use the ICT all-in-one indicator. Let's turn on the zigzag. So right here we formed a high, we pulled back, made a lower low, a lower high and a lower low. In between those two highs, our lowest swing point would be this low right here. On a 5-minute time frame, we actually shifted structure below here before we reversed to the upside above the London buy side liquidity. Okay, and there we fail. Like we said, the probability is always there. I was just about to talk about a potential unicorn setup where this row of, or this series of up closing candles would become our breaker block. We took sell side, we shifted to the downside, we displaced back to the upside with a new bullish market structure shift above here. We would look at these array of up closing candles as our unicorn model breaker block, but I don't think that we're gonna do much from here. 1 minute, we're below the 9:30 open. I think we're just gonna continue to sell off. We have one more 5-minute bullish fair value gap. Right down here we have the new day opening gap as well. That hasn't been filled in completely yet. Unfortunate. If I would have seen that previous day's high or the entry on at least the 5-minute time frame, I would have been in on it. But seems like we missed the entry today for our funded account. We got the entry though on the 1-minute time frame, but not based on a fair value gap really. We got the confirmation close right here. Let me turn on the executions. Entered short right here based on a breaker block and secured already at this buy side liquidity, because at this point in time we did not see the potential for it to reverse 100% to the downside below the 9:30 low. Up until then, main order flow here on the 5 and 15-minute time frame was still bullish. Right now we bounce off the 8:30 opening level, the dashed line here, no, dotted line. In the end, you just never know. It's fine. Chasing now is the worst thing that you could do, because you missed out. But the market is going to be here tomorrow and the day after tomorrow. It's not really a one-time opportunity that we're missing out on, even though sometimes we act like we do. Like the model is never gonna appear again, blah blah blah. Today it delivered, but just not from the area where we wanted to see it. That's why I was still looking for a potential retracement. Now we're inside this 5-minute bullish. Let's check the 15-minute market structure shift. Would happen once we close below this low right here. then we would have a big range. We could use an entry of a breaker block, but it would look something like this. You can already see how big our stop loss would be relative to our target. Even though we could even target previous weeks and previous days low. Let me just hide the higher time frame fair value gaps because they really annoy me right here. But that's, yeah, the intention of this indicator, because if you have something you don't like or that you don't want to see at this point in time, you can simply enable and disable it out of your control board without having 10 indicators on your chart, if you even able to have 10 indicators on your chart. Let's check out the 5-minute structure. Same market structure shift level would be a pump and dump. We took out buy side. We might now want to revisit this Asia accumulation. Now we have equal lows right here with that 850 low on the 5-minute time frame. I would still like to wait for a 15-minute opportunity if I get in on this short. 15-minute candle is going to close in 7 minutes. We already sold off significantly, so at this point you should realize that. You have maybe that little bit of FOMO coming up, that feeling, that emotion, that entering down here might not be the best thing. We already sold off. We haven't retraced for the last almost 15 minutes here. 5, 10, 15. Getting a pullback back into our range would be likely once we confirm the market structure shift. Fair value gap right here. Once we close below this candle would become our breaker block on the 5. On the 15, yet I would still like to wait for the confirmation. It's Monday, we just started the week. No need to rush anything. Let's take a look at Nasdaq over to the right. Nasdaq is roughly at that same level, also at the low, but also at the midnight level, NT830. Pump and dump, yeah, I think that's pretty clear. But I want to see the confirmation that we continue lower. A 1-minute chart, we have equal lows, we have a tiny little bearish fair value gap. We could retrace somewhere up into here. No. Forget about the 1 minute. We will wait for a 5-minute opportunity. So what does this look like? What would we see on that right? What would we like to see in the future? Classical charting patterns. Let's see if anyone knows the answer, what I'm looking for. YouTube chat, you're asked. And also Discord. What classical charting pattern would I look forward to enter on here? Classical charting pattern, not ICT pattern, whatever. That's where they came from originally anyway. Otherwise, ICT would be more than a YouTuber. What's that charting pattern? We all have it. We all have it. There's even a song for little children about that, about this charting pattern. Come on, one person can tell me in the chat. I'm gonna wait, otherwise I want to see at least one or two guesses. Fay TV, H. Smith, come on. What classical charting pattern am I looking for? Come on, guys. You make this really boring. Head and shoulders, knees and toes. So that's the song. That's the classical charting pattern I've been referring to. Unfortunately, no one could give me that answer. Right here, we have that consolidation representing our left shoulder. We have that pump and dump setup into buy-side liquidity. Not our previous day's high, but still okay. Being our head. Now we would like to see our right shoulder being formed. Somewhere around this area. Right here we have our neckline. We tapped this low, but we didn't close below it yet. And where are our knees and toes in this picture? So right here we have the head, our face, our eyes, our nose, our left and right shoulder, here our arms, and down here we have our knees. Yep. And here are our toes at the previous week's low and previous day's low. I hope that makes sense. My drawing is not perfect, but I think you should get the idea. Head, shoulders, knees, and toes. We take partials. This is our final target. That's the setup that I'm gonna be trading today. All right, and we have 1 more minute to go before we confirm the 5 and 15-minute market structure shift. Let's go. Go, 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 go. Yeah, come on. Close below. Okay, so we even took out the sell side liquidity right here, or this low. Picked up some stops basically of this entire range. If we were to measure the entire dealing range of this current daily candle, we measure from the high, or from the low to the high, and we can see we're below 50% and we just took sell side liquidity below the 50%. For me to go short, I would like to see the close below. If I don't see the close, I don't enter. It's that simple. Because price could still seek sell side in a discount below the 50% level and continue back into a premium. Until I see that close, I'm not gonna engage. Buy the dip. Ooh. Maybe. Let's check it out on a 1 minute time frame. I wouldn't take it on my funded account. Counter trend trading. If you like Turtle Soup's entry and that's your strategy, then sure. If it checks all your boxes, but I'm not that big of a Turtle Soup trader. You rarely see me taking Turtle Soup entries, so for me, no entry here. Head and shoulders, knees and toes, knees and toes. We want to see that pull back for the right shoulder. Move towards the knees and toes. 15 minute. So now new 12 minutes until we get to 15-minute confirmation. 2.5 minutes until we could potentially get a 5-minute confirmation. This be a good point to look for a pullback, long entry if you are a low time frame scalper. Right here we already see that we start to lose momentum. We close below, we immediately push back up, we made a lower low, so our market structure shift would come in right if we close above this high. But we would like to see some displacement with that. A nice set, or maybe just one extremely bullish candle leaving behind a fair value gap, and then a potential entry back maybe towards the VWAP. But I'm not gonna do that, not even on the paper account. My Apex 50k paper trading challenge. You can by now manage your accounts, and I don't know, it helps me to take the paper trading account more serious. Not entering with 100 contracts or something. That's like, if I'm not trading my live accounts and I, for example, say, okay, today we have news, I always go to my paper trading account, to my Apex 50k challenge on my paper account, because that simulates, trading for me. I don't know how to say it, like a professional athlete, basketball player, football player, whatever, is practicing 3 or 4 or 5 times per week. Doesn't always mean that every throw or every shot in practice is as important as a shot in a final game or in a qualification game. They still practice, and that's why I really like using my paper trading account and simulating like it is my Apex funded account or my Take Profit Trader funded account, Topstep funded account, whatever it is. But you need to practice, and taking practice more seriously instead of saying, I'm gonna go long with 1,000 contracts here. Some like doing that though. We closed right at the low. We didn't close below it yet. 5-minute bearish fair value gap would start right here, and I think that should also be our 15-minute. No, it's right inside our 15-minute candle. Still 10 minutes to go, so we have some more time to chat. Feel free to ask me any questions regarding the ICT all-in-one indicator. What do you think about it? You think it's helpful? Especially for the people who do not have a TradingView Premium subscription. It's all in there, power of free, multi-time frame fair value gaps and volume imbalances, macros, kill zones, market structure, break-off structure, your entire chart layout. Really makes life easy. And of course, that's the alpha version. It's not done yet. We will have breaker blocks and all that kind of stuff added in the future as well, but it will take some time. Rome wasn't built in a day. 15-minute and 5-minute, and we pull back. 8 minutes 20 left. 3 minutes left. Let's see. Did we close below or did we close right on it? We closed right on it, so no confirmation here on the 5-minute time frame. For me, retracement into any of these fair value gaps. Pump and dump. That's roughly where we would look for our right shoulder to form. Left shoulder, right shoulder. Could look for a fib retracement. But before that, I'd like to see that actual confirmation. Until then, until I see that confirmation, this is a liquidity sweep. They trapped traders long with this move to the upside, especially at 9:30. And now they're in their positions, maybe still holding on to them, but very likely all of them were liquidated. They attacked some more stops from traders that got in to a long position during the London session that didn't take profit because maybe their take profit target was yesterday's high. So, yeah. Quick stop hunt below the 50%. Retracement into our Asia consolidation to continue back on our initial target here, the previous day's high. Both possible. So for me, until we close below on the 5 and 15, it's still bullish. Long term or medium term for today. If we see the close below, confirm market structure shift for me with displacement and bearish fair value gaps. Good. Then I'm looking for shorts. Until then, sweep sell side, do the most amount of damage, and reverse back up. Because then you got enough traders trapped short, and they have to sell to you or buy back on their way to the previous day's high, which just accelerates that entire move and makes it easier for the market makers to bring prices back up to 4185. Like in the interview I shared in the general chat on Sunday, where a 40-year-old trading veteran in the pits in Chicago, now at the New York Stock Exchange, was saying that you have to think like a criminal when you're trading and look at the charts to trying to get a good feeling or sense of when they're manipulating price specifically to make enough traders jump into a specific direction, like the long opportunity. Now we displaced, they're in max pain mode. They have to get out of their positions or were already liquidated. But we want to make sure we're not ending up in the same way with a fake out to the downside to grab some stops, buy some more down here to continue back up. 4 minutes to go. I think the 5-minute chart closed below, so we have a confirmed 5-minute market structure shift. The sell side liquidity has been taken. Let's label all that sell side. Then we have the midnight open level brought to us by the one and only ICT all-in-one indicator. More lows right here, and then the new day opening gap. So yeah, really, this is our displacement now, our market structure shift confirmed, measuring from the low to the high. 50% would come in with this bearish fair value gap here on the 5-minute time frame, and if we go to the 15, I would still like to wait for that candle close to happen, and then enter on that lowest fair value gap. We have our sell side liquidity mapped out. We already took that. London buy side has been taken. Done. We have our 8:30 level. 3.5 minutes to go. If we close below, I'd prefer the 15. the slowest down closing candle would become our breaker block. But we're already rejecting. Let's see, still 3 minutes to go, nothing's decided yet. Bearish fair value gap, bearish fair value gap, inversion fair value gap, another inversion fair value gap. 50% retracement level, and then we could take it down to a 5-minute time frame to look for a better entry, maybe around VWAP for the continuation lower. We would have to give it some, quite a lot of room to breathe. In terms of point stop loss, my stop loss really should be up here, 17 points. And usually when my stop loss is that big, I'm simply looking for a 1-to-1 risk to reward, which would roughly bring us to the new week opening gap. And then that's where I would take most of my position off. And with the backwind from the higher time frame, maybe even target the previous week's low. Take, of course, partials around the consequent encouragement. But really, if we get the close below here now on the 15, just to put it into perspective, we would measure our last manipulation to the upside from high to the low and use the fib retracement tool to project standard deviations. We can see that with one standard deviation of this up move, so if we measure from low to high, and we would draw a box, for example here, duplicate that box and put it right here at this low, one standard deviation would carry us below the new week opening gap, and 1.5 would deliver us into the previous week's low sell side liquidity pool. Realistic in my opinion. We are about to get that 15-minute close. Same goes for NQ, but because we're pump and dump scenario with a big stop loss, I'm gonna use the MES here. I will not use any of the indicators. Keep one chart nice and clean. Also go to the 15-minute time frame. "44 seconds to go. This is our breakup. Damn it. Lowest down closing candle. No, I'm gonna use this one. This is our breakup block. Lockout paper trading. Take profit trader account. Selling off towards the end of that 15-minute candle. Bearish fair value gap. What's the time, by the way? It's 10:30. We are about to hit that midnight level. Yep, and we just tapped the midnight level and got an immediate rejection to the upside. Haha. Nice. Alright, anyway, we could sell off here and we simply miss out. We're not here to chase price. Let other traders do that if they want to. I'm gonna get an entry right here on that breaker block. That's where I'm gonna add my first micro. And my second micro is gonna come in on this bearish fair value gap. We already filled, nice. And what level did we touch? New York midnight level. And what do we do from the New York midnight level? Push up. Random? I don't think so. That's why we use micros to lower our risk. We are in with one micro. The second micro comes in at the 15-minute bearish fair value gap. Then we can look at the 5-minute fair value gap, which would come in at the price level of 4163, which is almost the 50% of this fair value gap. Middle line, where I would add another micro. And if we should retrace up into this area, I will add the 4th micro. So scaling into the position, my stop loss is going to be above this high. Buy stop. We would go in with 4 micros. Let's measure the consequent encouragement of that wick. And put it just above. It should be fine and protected. And in terms of targets, let's use our main chart here. What's happening? I've timed out because it's so big. The current low of the daily candle is where I'm gonna set my take profit target, my first take profit target. Bounced off the midnight. That's where we would like to see the retracement to our right shoulder for the continuation lower. Nice and clean, 15-minute market structure shift model. We scale into our position. We have our take profit targets. Then 50% of our new week opening gap. We can simply use the ICT All-in-One Indicator, scroll down to the new week opening gap, and mark out the consequent encouragement. Let it load here a little bit. No, come on. Timed out. Switch time frames here quickly. Because I'm streaming on Discord, YouTube, multiple charts open, Chrome running in the background. Right here, 50% comes in at 4142. 41, that's almost our take profit target anyway. 4143. Yeah, no, that's fine. Let's see with how many contracts we get filled first before we take any other entries. Just gonna let that rock here. Nothing to worry about. Nice that we got a entry opportunity on the 15th, right after I made that video on Saturday talking about the 15-minute models, the decent win rate. Very good win rate for no stress at all. You take your entries, you can leave them, set them forget, and you're done. How can we get that indicator? Good question. Thanks for asking. Right here, during this live stream, actually, there's a 15% off discount if you use the code LIVE at checkout. You simply go into the first link in the description. That gets you to my new website. I set it up this morning. And right over here, we have all the different membership options. You can, if you want, also buy a lifetime membership. You can pay that one with crypto. I have a limited amount of lifetime memberships that I want to sell. I don't want to sell too many of them. And yeah, you get access to the TradingView indicator with the all-in-one, or you can join a VIP membership, and where you also get access to the ICT all-in-one indicator, the daily trading signals, the daily Discord live streams without any ads, and a 1-minute delay. Get access to my trading journal template and the Google Drive. That's an old one. All the old accumulations, some members will remember that. Back in the days where I coded PineScript strategies and shared them on YouTube if they worked or not. Yeah, back from those days, I have an old Google Drive with over 25 with full source code and everything in my Google Drive, and I decided to share that again as well. It's pretty cool if you want to learn trading, coding, PineScript to create your own TradingView indicators. You also get the template for the strategies that I always use. Yeah, but yeah, use the first link in the description. Use the code LIVE. It should be at the bottom of the live stream here on YouTube and the banner. And once I end this live stream, I will disable this promo code. And if you have a friend, that's also cool. That's why I switched from Patreon over to WOP. If you have a friend and you want to recommend this indicator to him, you can somehow. I will update everyone on Discord once I found out how you do that. You can, once you are subscribed to it, or you purchase it, I'm pretty sure, you can also refer to a friend, and I've set it up here inside the WOP settings that you earn a 10% commission on your referral. So if you have a couple of friends you want to share it with, or Twitter, whoever, then yeah, you could even get some commission space on that. And that's what I really like about WOP. With Patreon, you do not really have many options. You couldn't, for example, Livestream Access, I added a weekly option where you can join for 1 week and then simply cancel if you want to test out what the Discord live streams are like and all that. So yeah, and I also have a TradingView integration, so I don't have to collect all the TradingView usernames, put them in my list, go over to the invite only indicator and add all those people, make sure once they cancel their membership, I'm blah blah blah, all boring stuff basically. Let's get back to our TradingView chart, and we see we're filled with 2 contracts already. We almost got filled on our 3rd contract right here at that consequent encouragement of this 15-minute bearish fair value gap. But let's not worry about the entry. Let's not upset ourselves. We have our model, we have our valid entry. What else can we do? Not much. We have our bearish fair value gaps. Let's check out the 5. But it's funny how we perfectly bounce off that midnight level. Now it makes sense to use our ICT fib retracement. %, would come in right here. We have the VWAP, we have our bearish fair value gap also on the 5. This is our 5-minute, 15-minute breaker block. 5-minute bearish fair value gap. And another 5-minute bearish fair value gap. Our optimum trade entry. What's the time? It is 10:50, so we are soon to get a new hourly candle. Interesting. Possibility is still there that this is just a fake out move to continue towards the previous day's high, what we spoke about earlier. But, well, setup is setup. Ticked all the boxes from the high of the day. Market structure shift, pump and dump. Unless we get the same thing now, where we pump and dump now immediately, we should be on that safe side. And if we invert it and would look for the bullish setup, we can, I always like to do that, to look at, to get a different perspective, what it would look like if we were going for longs now. Keep on going lower. We didn't take out Asia sell side. We did, not really. We didn't take out London buy sell side yet, or buy side. Now it's inverted and everything's messed up. We had our sell side liquidity grab. We leave that previous day's high, daily bearish fair value gap remaining for maybe tomorrow or FOMC news on Wednesday. Get our strong displacement. We have our entry, and we simply look forward to target higher prices. Now we turn it back on, and we can see, that still lines up perfectly. Nice. 15-minute. I don't think we got filled with our... awesome. The micro chart actually hit the 50% level, while the... okay, yes, that as well. Sorry, guys. So 5-minute bearish fair value gap. We get rejected. We are in with 3 contracts. I'm not going to be streaming for this entire trade. Everyone who's here with me saw the entry and had the opportunity to take it. It might work out, might not. Law of probabilities. Gotta think probably in probabilities in order to make it in this game. So, even if you don't believe it, you have to tell that to yourself every time you look in the mirror, every time you take a trade, until you fully convince yourself. Freshky, are you in with me? Only 15-minute models. Remember, that's what we said. Now we got the opportunity. Freshky. Let me take a look at NASDAQ over here. NASDAQ's not open over here anymore. Let's open up a new tab. Let's see how many views we have. Nice. 8 likes. Awesome. Even without me asking. That's very sweet of you. Let me pull up the DXY first. Not yet for the VIP, but something is coming. I'm not gonna say more. A specific Friday after Thanksgiving. DXY daily. Yeah, many drawings on here. Okay, DXY bullish, took out the high, took out the previous week's high, starting to retrace. DXY lower. 1 hour time frame, 4 hour time frame. DXY making lower lows and lower highs on the hourly. Back inside the daily bullish fair value gap. We would look for a move up on DXY if they're correlated today. Inversely correlated like always. But right now we still have these relative equal highs up here that are yet to be taken. We have our previous week's range if we measure from Tuesday's low all the way up to Thursday's high. The 50% lines up nicely with the sell side liquidity and the 50% level of this daily bullish fair value gap from over here. Even a optimum trade entry reversal, not reversal, pullback would be healthy for the DXY to continue up higher. But here on the daily time frame, yeah, just to make sure to stay up to date on what I share on the Discord. Is there? Let me quickly check. Did I think if you use the code AZ, no, I will let you know. Let's not do that on stream. But right now we are inside the range. It's pretty hard to tell on a daily. We could check the weekly on the DXY. Exactly what I'm talking about. We're consolidating. If I hide all these drawings. Do you really want to trade inside this? Like, let's say specifically the foreign currency pairs. We take out highs, we take out lows. Really hard to tell, and that's the first time we go sideways after a extensive red to the upside. From here all the way over till here. 77 days. So almost 3 months, a little bit less than 3 months. Rally to the upside. So what would we expect? A healthy retracement maybe. 50%. Which would fuel the bull market for crypto. Let's go. Freshky, are you here? So we rejected, but we open up with a 15-minute bullish. Let me check that on the 5. Let me check that on the 1 minute time frame. 1 minute time frame. You can see that same setup that we were looking at on a higher time frame. Left shoulder head with the displacement and our right shoulder being formed. We just hit the VWAP. And I'm only taking trades here on the 15 really to make a point, because I really got some great feedback from that 15-minute time frame video where I take higher time frame entries from traders who really struggle with the lower time frames. And then at the same time, I don't want to be scalping the 1 minute time frame on stream, and also for myself really, if I put out videos like this. There's still a potential that this could be ending up as a potential whipsaw, where we take buy side, take sell side, and then still continue with the initial trend direction. But be honest, guys, do we ever have a scenario where we can frame us losing? If you're in a trade and you look for a reason why it could hit your stop loss, you will always find one. There's no 100% opportunities with 100% certainty. This is a good scenario. We took out buy side, we displaced, we left behind inefficiencies, and we continue lower. It could always be the case that we get stopped out. And that's part of it. It's normal. It's healthy. And the funny thing is, most traders don't blow their accounts after a long losing streak. Most traders blow their accounts after a long enough winning streak. Think about that. How fucked up is that? Because we get overconfident, we feel like we can risk it all on that one single setup. We're feeling invincible, feeling like we can't lose. But most of the time, when we blow our accounts, it's after a winning streak. Doesn't matter how long it is. That feeling of overconfidence comes in. When we're in drawdown, we do our job properly, because okay, we know how easy it is to lose money. We risk appropriately. We take only specific entries. But if we're on a winning streak, we don't care. We're champs. We know what the market is going to do, and let's go. Let's get ready here. Yeah. And that's most of the time our downfall. Where's YouTube? Here. What time is it? It's a new hourly candle, I assume. Yeah, 11 a.m. Check out the hourly time frame. Bearish engulfing. So unless we get a very, very unfortunate Monday where we go up, go down, go back up, let it be. It's okay. Daily time frame. Order flow is bearish, but I could see us getting into that daily bearish fair value gap throughout the end of the day. 4 hour already did some sort of a retracement with a 4 hour bullish fair value gap, but that already brings me to the point of, if you want to look for a reason why you should get out of a potential losing trade, or after you took an entry basically, you will always find one. You just drive yourself crazy instead of letting your setups play out, accept the loss, and yeah, that's just part of what we do. Let's see, in terms of a pullback, we are already above the 50%. Let's see what we do around the golden pocket and optimum trade entry. Let's use the ICT fib retracement. Right up here we have our optimum trade entry. Even though I would prefer to reject from these lower areas, that's really what I would be looking for a plus trade setup. The entry, my opinion, was A plus. Bearish fair value gap, displacement, took buy side at the high of the day. Done, like we spoke about in that last video. The outcome, for it to be A plus, I would have liked to see a rejection from this area and continue lower. This is already making it, kind of a B minus setup, because we're really showing some strength here. But it's okay. It's like we said, 15-minute time frame. We have our left shoulder. We are now looking for our right shoulder to form, which is essentially that 2022 model. If you take a close look, we make higher highs and higher lows. We have our displacement. We pull back and we continue lower. What's that looking like? I think I've seen that somewhere before in a book called Classical Charting Patterns. ICT, where's my $1 million? It doesn't matter if you use a fair value gap entry or a fib retracement based on your displacement lag. The language is what I think is valuable, what ICT taught. But he didn't reinvent the wheel. Mm-mm-mm. 1 minute time frame. So guys, are there any more questions? Because it's 11 a.m. That's usually when I end the live streams. And that's also when the promo code, the 15% promo code will run out for the all-in-one ICT indicator. Right here, first link in the description. I will work on a full in-depth explanation video about the indicator tomorrow, where I explain every single feature, how to use it, how to set it up. And yeah, I will upload that this week on my YouTube channel, how to customize it basically and make it your own, how to modify all these settings. Or yeah, you could also simply ask me on Discord or during the live streams and I will answer that question. Alright, we filled that highest bearish value gap on the 5 and also on the 15 we tapped it. Let's see how we go. That's a trade setup for me today. I will keep an eye on it, but it's not worth it to waste valuable lifetime just to watch this trade play out. It's nothing we can do anyway to change its outcome. If we're sitting here or not. So let's see, guys. Do you have any more questions here on YouTube or on Discord for the members? Ragnar H. Smith. We can be chatting here after I ended the YouTube live stream if you want to. Let me skip those ads here quickly. Let's see what the YouTube live stream is up to still at this point. Yeah, that delay. Not so nice. %50 of that 5-minute bearish fair value gap. DXY, 1 minute time frame. Alright guys, it is 11:10, that's the end. That was that last macro, if we turn it on here quickly. For the early AM session, we will have the PM session afterwards, starting at 1 PM New York local time. But in terms of macros, where are the macros? Come on, here. Macro color. That was that last macro that I usually trade or set in front of the charts. Afterwards, I most likely have already got my entry on the higher time frame and now I'm just gonna let it play out. We scaled into this entry. We have our take profit targets. We will see if it plays out. We can't expect 10 out of 10 setups to play out, but we can expect at least 5 out of 10 to play out. And if 5 out of 10 play out with a 2-to-1 risk reward, what happens? We end up with net profit. And that's all we do. We're not here to win every day. If you are, it's gonna hurt when you lose, and very likely, if you lose, you will not be able to accept it. And I'm talking, I've done all these mistakes before. That's why I'm talking about it, and have made them multiple times. Trust me. But yeah, I think that's really what it comes down to. Stick to your rules, have your risk to reward ratio, and then you can pretty much play the slot machines with the probability in your favor. Yeah. Can be that simple. But most of the time, if we're in that 5 winning streak out of our trading sample size of 10, we feel invincible and we risk twice as much, and then the first loser comes in, and because we're not used to losing, we try to make it back and we lose more, and then we messed up our entire sample size of 10 trades, and we all know how it goes. We've all made these mistakes likely already. If you haven't yet, maybe you learn from it without having to make the mistakes, but I think in the end of the day, it's crucial to make these mistakes. You hear people say, oh yeah, don't make the mistakes and learn from what I'm saying. But everyone has to go through their own journey. And yeah, I guess there's some people that learn it the easy way, learn from other people's mistake or other traders' mistakes. And there are some people like me who have to jump out of the window, land on their face to really learn it. Make the same mistake over and over again until I finally understand what I should be doing and what I shouldn't be doing. So yeah, guys, I hope you enjoyed today's live stream. I will be back on tomorrow.